Hello, folks. Welcome back to Management 5804, Leadership and Technology-Based Organizations. I'm Dr. David Townsend, and this will be our second lecture of the semester, Lecture 1.2. And in this lecture, we're going to spend a few minutes continuing our discussion of the challenges of developing and enacting technology strategy in complex environments. And so we're going to pick up kind of where we left off in the last lecture by discussing some of the challenges that incumbents faced when Apple entered into the smartphone market. And to that end, right, if we sort of remember back now a little over 10 years ago, so about 11 years ago when the iPhone was first released, and it's kind of hard to believe if you think about it, it's only really been 11 years since the iPhone came out on the market. These incumbents that were dominating this industry had significant amounts of market share and were performing quite well. And you can even see that even into 2008, so about a year or so after the iPhone was released, and analysts, investors were still expecting both companies to outperform or to continue to compete vigorously in this particular space. And you can see a pretty clear run up there in terms of the overall market cap. And some of the decline clearly in 2008 is not just because Nokia and BlackBerry were disrupted by the Apple's iPhone and the emergence of other smartphone products. Also, the financial crisis contributed to it. But you can certainly see a clear link here for when the various products themselves were released. And so both of these companies in general seem to be caught unawares as they tried to compete vigorously against Apple. And as we mentioned in the last lecture, recently Apple has been catapulted to over $1 trillion in terms of market share, which is just unbelievable when you think about that. Particularly given that even about 10, 15 years before the iPhone release, there was a lot of speculation that the company was going to go out of business or go bankrupt. So, let's say in a short time period, but over a couple different decades, Apple was able to re-engineer itself, develop new products, new business models, new ecosystems, and launch into a market where now they have a dominant presence and have maintained that for well over a decade. And so again, as we looked at the ubiquity, so to speak, of a power law distribution, we can see the end result. With about 9 years after the launch of the iPhone, was Apple maintaining the clear lead in this market and producing this power law distribution, where you have a couple firms, Apple and Samsung, notably, that really control the market, followed by a long tail of firms with much smaller market shares relative to the market leaders. And so we talked about the role of complexity in producing the ubiquity of this pattern. But at the firm level, one of the key challenges here that we've hinted at and highlighted is how the companies themselves, how these two companies that were competing head to head with Apple evaluated or at least saw the iPhone as it released. And I think the quotes here come directly from either news reports or the financial or the annual reports of each of the companies, and I think they're pretty interesting to go back and look at. They haven't aged well. So Research in Motion executives, right, said it's just one more entrant into an already very busy space, lots of choice for consumers. They didn't see it as a sea change for the BlackBerry, so that was the CEO of Research in Motion in 2007. Another executive at 2008 noted that the iPhone was great for the BlackBerry because people came in looking for the iPhone and walked out with the BlackBerry. Nokia's chief strategist is interesting. This person noted that they thought the mobile phone market was going to proceed or evolve in a similar way as the PC market. And so, again, if for those of you who remember back into the PC war era, back in the late 80s and 90s, I mean, clearly Apple never gained traction in that space and always had somewhere between 2 to 3% market share. And so after some of the massive success they had with the Mac 2 and some of the other products, Apple was never really able to gain anywhere close to a dominant position in that market. And so for a variety of reasons, but certainly this was a pattern that many of these folks were looking at. So Nokia chief strategist said, hey, the mobile market's going to be the same way as PCs. So Apple's always going to be a niche manufacturer, and that's going to happen in mobile phones. Steve Ballmer was CEO at Microsoft at this stage and said there's no chance that the iPhone is going to get any significant market share. He was arguing that it's a $500 subsidized item. They're going to probably make a lot of money, but from his perspective with Microsoft, they would rather have their software on 60, 70, or 80% of the phones rather than trying to sell hardware. And so in that, again, these companies were still viewing the hardware, even the hardware-software trade-offs as from the PC era as the dominant way that these models were going to evolve forward. And so nobody expected, I mean, these companies did not expect Apple to gain significant market share and be as successful as it's been, and really in some ways upended the traditional logics of how you compete, or at least the logic as they existed in the kind of mid 2000s for how you compete in this space. And so most people, had views that were consistent with the gentleman's name is Marc Andreessen. He's probably one of the top venture capitalists in the world, who a couple years after the iPhone wrote an article called "Software is Eating the World," and the argument essentially was that everything was moving to software, and that's really where you would kind of make a huge splash and be able to make money. You can see Ballmer's logic, or adopting a similar logic, in how he viewed Apple. And then bottom left-hand corner, save the best quote for last. And maybe they weren't all wrong, but when they're talking about tablets, the folks at Research in Motion said, "What market or opportunities is the tablet solving?" And I think that's still an open question in that particular product space, where tablet computers haven't been quite the same disruptive innovation that laptop computers that everybody expected. And so as we think through these various issues, it's clear that the prior recent history of how these particular industries or markets unfolded provided an unreliable guide to these companies as they moved forward. And so framing strategies, in the sense where you use immediate prior history to try to figure out what's going to happen next, can lead you astray. And so in the middle of that, applying the wrong frame, clearly creates some strategic challenges for the company. And, as to the surprise of no one, since we have the benefit of hindsight here, we can see that, iPhone share of all phone units, revenues, profits, this graph up in the upper left-hand corner, they still maintain a pretty small amount of market share in the specific space, and so they're not ever selling more than 10% overall of the units. And so in that sense, Ballmer wasn't necessarily wrong. Apple maintained a sort of niche position within this space, but their overall control of revenues and profits is where the company clearly dominates. And so the notion that software was going to completely supplant hardware, and hardware was not going to be any basis upon which companies can generate money or generate profitable returns, clearly was upended in this space. And so the PC Mac battle only provided a partial example. And so again, there were some key differences between these markets that in hindsight become obvious and become clear. And then also Microsoft by itself, certainly changed its mind later when it tried to come out with the Microsoft, their own phone. And then those of you who are I've only met a couple people that have ever had them, but if those of you who are true music enthusiasts, maybe some of you had the Microsoft Zune instead of the iPod or one of the other digital music players. They certainly, again, Microsoft's clearly tried to change its focus as they moved into hardware later on, and both of those strategies, or most of their hardware strategies, were ultimately, particularly consumer-facing hardware strategies, were ultimately unsuccessful. Android did basically adopt the Microsoft model in terms of software, but although they gained significant market share, they were not able to, or still haven't been able to gain a significant amount of profitability. So in the middle of that, this emphasized the importance of framing, right? So a frame really is a mental window through which we view a particular problem, situation, or opportunity. And so it can be useful for navigating complex environments, again, because there's so many factors that are out there. Framing strategy can help us determine the scope of our decision making, and helps us drive meaning in these really high flux dynamic environments. At a critical level, framing strategies help us solve that diagnostic complexity problem of identifying which factors matter and how to interpret those. But the specific problem is that oftentimes, we're drawing from our immediate history without understanding what the underlying structural patterns really are. And by structural patterns, I mean, what are the things that are consistent as we strip away the specific things that each company has or doesn't have when it's competing, right? So we don't try to build a strategic logic based on a one-off or an N of one sample, just one company's experience, but we look broadly to to specifically identify the underlying patterns there. Then these framing strategies can help us make sense of a high degree of complexity and give us a roadmap for moving forward. And this is important because as we move into different spaces, right, there's an increasing level of technological and demand uncertainty. So technological uncertainty here, just refers to what extent is the architecture of a firm's product or business model changing. So what is technology, new technologies doing to the way that a business is organized and the way that it's run? And then demand uncertainty is how quickly or rapidly consumer preferences are changing. And clearly we would expect a lot of that in the software or the pharmaceutical industry. But even if you look in the left-hand corner, you can see banking and real estate, even tobacco products are experiencing a tremendous amount of change now as we see e-cigarettes. So digital equivalents almost of the cigarette industry are emerging. In the banking industry, there's a huge amount of upheaval that's starting to happen as mobile banking really starts to take off. And again, there's different rates of return and different types of business models being experimented on in that space. But you can see a lot of the major international banks are experimenting with a significant amount of digital infrastructure in order to change the way they reach and interact with their consumers. Stock trading apps, those of you who like to do investments, I mean, Robinhood has had a relatively significant impact on the investments industry as it created a mobile-only digital platform for stock investing. And you can even trade some cryptocurrencies on the platform now. I promise you I'm not giving a plug for the company. I'm a user, but not a paid endorser, and never will be. But in that particular space, you can still see significant changes. Healthcare is experiencing a tremendous amount of upheaval and change, clearly because of some digital disruption or digital challenges. And so overall, I mean, I think you're seeing most of these rates of technological demand uncertainty even shifting to that upper right-hand quadrant with a high degree of change and dynamism in these various spaces. And so this, again, creates a variety of strategic challenges for us. And we talk about sort of rapid or exponential technological change, so a really runaway pace of change. Firms have to adapt very rapidly to do these things. But because of this sort of turbulence of these environments, it's difficult to diagnose or figure out what's happening. And so this leaves incumbents very vulnerable to a specific type of threat. And this is the threat of disruptive innovation. And this is a buzzword that's thrown around all the time. There's even, if those of you are fans of the HBO show Silicon Valley, you know all about the Disrupt conference that tends to be kind of a source of immense humor in the show. And you can see some sort of outrageous or kind of ridiculous hype around new technologies, new ideas at these Disrupt conference. But it refers to a real thing, right? TechCrunch has the Disrupt conference every year built on this logic of disruption. And so again, we're going to sort of deal with this pattern here in the next unit to try to unpack what it really means, because there's a specific framework, a specific pattern that emerges with disruptive innovation. And there's some controversy around some of the ideas. And having spent my career really working and advising startups, I've seen a lot of them apply these disruption strategies really ineffectually, and it's led the company astray. So it's important for us as technology strategists to understand what disruptive innovations actually are and how they actually function. And as an incumbent, how do we respond to these threats? What specific changes, what strategic actions can we take? And if we're a new entrant, how can we apply some of these logics effectively to give ourselves a fighting chance to be successful? And that's really important because as we talk about the power law distribution, what you see are winner-take-all markets, right? And so, if you're the market leader, you generally are going to significantly outperform even the second-place firm in your industry space, and then certainly you're going to outperform those in the long tail. And so it's important to get it right, but it's difficult to diagnose what the real challenges are. And so framing strategies help us do that, and they help us unpack diagnostic complexity. But in this particular class, we'll talk about the three specific patterns underneath that can help us with a more effective framing strategy. So, as we sort of think through the specifics of the broad challenge we're going to tackle this semester, that turbulent technological environment is going to require some new ways of thinking for us as managers. And in some ways, it's going to challenge us to throw out some of the models of recent past history that we've learned in order to try to figure out what's going to happen next. And in replacing our recent history, we're going to focus on three specific types of structural patterns. And the first one, again, as we've highlighted a couple times here, is this notion of disruptive innovation. So what is it? How does it function? How do firms compete either as a new entrant or as an incumbent company? When are we facing the threat of disruption? What are the key ways to diagnose it and to respond effectively? We'll also talk about S-curves and consumer innovation adoption patterns. And so this allows us to really unpack what's happening in the customer side of our environment to understand how to design products effectively to meet needs, and how to position ourselves effectively to gain entrance into the mainstream of those markets. And then the third one we're going to talk about is business model innovation. So the third structural pattern is looking at two models in particular, the long tail and multi-sided markets, as specific ways that we can build a business model of a firm, innovate, and then eventually create what a lot of people are starting to refer to as omni-channel business models, and even building out a product ecosystem. And so we'll kind of unpack some of the decisions, strategic choices that even Apple made as we talk about how to design a broad product ecosystem as a way to gain the upper hand in technology strategy. So again, we're going to kind of tackle the three key challenges of strategic action for firms. It's a disruptive innovation deals with the challenges of competitors. It gives us a pattern way of understanding how to decipher when something's going to be disruptive or not going to be disruptive. The second one looks at the customer side, right? So it allows us to investigate how to reach customers and how to design products and services effectively to reach those customers. And the third one deals with the internal organizing logic, structural logic for a firm, of how to innovate with our business model in a way that allows us to build out a very robust ecosystem. So collectively, these patterns give us a much more precise, a much more nuanced, and a much more robust way to investigate and to sort of overcome the challenges, investigate our environment and overcome the challenges of diagnostic complexity, right? Of understanding what matters in an increasingly complex environment to help design strategies that allow us to position ourselves effectively for future growth and success.